Sweet, bro. So we started the year off with a whole bunch of cool conversations, and one of the consistent things now that interest rates have gone up a little bit that I'm hearing is, how can I get to financial freedom sooner? And so I thought it'd be cool today to talk about mine and your most simple strategy for those of us that are just getting started as investors.
Yeah, absolutely. It's been a question on the tip of everybody's tongue at the moment is like, how can I operate through this market? A lot has changed over the last 12 months and, people are just holding on to some of those changes and it's stopping them from being able to take action. So it's going to be fun to talk through what we personally do, what we've helped many of our clients achieve as well, because whilst it might not seem like an attainable goal, with a nice simple strategy, you can certainly get there. It's just going to take time.
It takes time, man. Like, I just have to keep bloody reminding myself of this every single week. My nature and a lot of investors' nature is to think about the future in a positive light and to visualize what they want down the line. But I've just realized I'm sort of 13, almost 14 years into it now, and it's taken way longer than I expected. The cool thing about yourself and many people listening to this is the strategy is so clear now, and the rules to follow or the process is so clear that people can make much better decisions much faster. But even with that, whether you're balling or just getting started, it takes time and it takes commitment, and it's a bit rough too. It's a bit bumpy.
Yeah, I think you need a lot of discipline, because even for myself, I could probably attain that passive income that I want sooner, but I self-sabotage. I'll go on a holiday or I'll buy myself a new toy, and it's all of those things are holding me back from getting to where I want to be. But it's trying to find that perfect balance of lifestyle plus making sure that I can achieve my long-term goals in life. And it's hard. I'm going to be 100% honest today. It's not easy, but it's fun to work towards something. And if it doesn't happen in 10 or 15 or 20 years, I know it's going to happen at some point in the long-term future.
That's interesting, man, because there was that cool little thing I saw from Shaq the other week where he just ripped the piece of paper in two and he's like, save half if you can, invest half and live off the rest. And one thing that I've done for the last 13 years I've always paid myself first, whether I was earning $45,000 and I could pay myself $50 a week after my costs, or, some weeks I've been able to save a couple of $1,000 and it's been phenomenal. So, for those of you out there, I think this idea of self-sabotaging, that's life, man. I love that we buy surfboards, we go on holidays when we want to. I spend to zero that money that I've allocated to spend, and then I've just got a consistent amount every single week that I chip away with, and that's so much better for me than budgeting, just in case we don't get a long life, man. You want
for sure
a seriously full life, living your values and enjoying yourself.
Yeah, whilst it's scary to sort of think about that, it's also a reality. The future is not guaranteed. Tomorrow is not guaranteed. So you've got to live in the moment and make sure that you fill your heart and fill your cup doing the things that you really, really enjoy doing. So, you've been investing for how many years now?
13, almost 14.
13, almost 14
Crazy.
Years. And how far away from this passive income goal do you think you are?
I'm just getting started again because there's fucking 6% interest rates, man. Last year I was cruising. I'm oh yeah, my passive income's well into the six figures. And I'm this is sweet. And then interest rates come in and 150 grand is gone to the banks right now, just straight out of the account, which is, the Australian government's dream right now, to drain our savings to get inflation under control.
What do we always say, right? The only constant is change, and you've just got to be willing to adapt to that. And there's a cool quote out there that's intelligence is the ability to adapt to that change. And it's just hard when it's so far out of your control, with those interest rates. That is a huge change that has come to the market, and it is something that we're all forced to deal with at the moment. I kind of look at it with a different perspective. I guess being young, I've always expected interest rates to sit around the sort of 5% range because that's really the historic average. But then when I'm doing my cash flow and I'm putting the details into my spreadsheet, I'm yeah, it's going to be a big year, but I'm excited for it because I know that through overcoming challenges, you become a better version of yourself. You get to look at those darker sides of yourself and confront those fears and then once you come through the other side of it, you feel proud and you feel like you've achieved something, and then you've just got more experience in the future when these things do come up again.
I love that, man. Like I heard this quote recently, like life will give you what you can handle. And like if you want to have an exceptional life in the future with financial freedom and with contribution, then life's going to want to make you a bit stronger than the average person that gets to that point at 70, you know what I mean? So there's going to be a bit of banging around, and there's going to be some uncomfortable months and years and days, and that's all part of the journey, but the strength you get off the back of that's insane.
Yeah, well, why don't we just jump straight into it and talk through an actual strategy or idea that people could maybe follow to start creating a passive income for life?
Yeah, so for me, there's a whole bunch of different ways to get to this point, right? Like we talk to people that have done it through stocks, through businesses, through passive businesses. I've seen a whole bunch of people get financially free through crypto before it shut itself. They're working again now. And they won't be working in a year or two when it goes off its head again. So I'll be the dummy working.
Biting your tongue in 12 months.
As always. I've seen people do it through property. I've seen people do it through property early and late. We've seen and talked to people who have done it in so many ways. But for me, if I was just getting started now, because I've made many, many, many mistakes from not having a plan, from not having anyone to talk about this stuff with, from not having a mentor, from having a really average team of advisors compared to what I have now, from not knowing if it was the right time to buy or what to buy. And I just didn't understand the history sort of 7 years ago properly like we both do now.
Yeah, those fundamentals have a huge part to play, and it makes you sleep a hell of a lot better at night once you understand that history and data that lead to the fundamentals that can put you in a better position in the future. But you've got to go through it to...
Got to learn somewhere, man.
Yeah, exactly right, exactly.
Learn from experience or just learn?
Yeah, learn from experience or learn from watching other people go through those experiences and try to avoid making those mistakes. I was listening to Leanna Hormozi, Alex Hormozi's wife, the other day talk about this, and she says...
Is he a fighter?
No, he's the entrepreneur sales guy
cool.
that's blowing up on Instagram and
The one
TikTok
with the beard
and stuff.
that's fit as
yeah,
Jack.
big Jack dude. And his wife was saying that that's probably the most important skill that you can adopt in your 20s is learning from observation.
Yeah.
And I've always talked about being quite good at this, fortunately. I think being the youngest of 4 siblings and, just being able to witness all of that, being...
Definitely.
Nobody put the baby in the corner. I was put in the corner a few times as a kid. So just watching and observing and learning from other people's actions so that you can avoid making the mistakes that other people have done and you can focus on the right path. If you can adopt that, or if you can learn how to do that in an earlier age, then it's going to enable you to avoid making those mistakes or hit the bumpers a few times.
The mistake that I think I'm making on camera right now is Simon's been looking at how hand gestures work and
oh yeah,
and I keep putting the gun out. This would be
that's
my mistake
intimidating.
in 5 years. It's just so nuts. It's like,
what was that? Yeah, it was a little Instagram post with Elon Musk and Cristiano Ronaldo and a few of the others, and they're all using these just power poses. And I'm like, I'm gonna save them and I'm gonna use them for myself. It's more of an internal thing than it is an external thing. But
I'm doing more like the Talladega Nights, just like what to do with my hands here. But yeah, I suppose this strategy, it's simple, man. So, it's called the 2 properties of financial freedom strategy. Some of you guys will have heard this one before, some haven't. We've slightly modified it to really suit people that are first-time, second-time investors. For those of our clients listening to this or people that are balling, cool. Like for me personally, I've bought a whole bunch more properties than a couple.
It's a starting place,
It's a starting place, and it's a future-proofing place. Like retirement's going to be sweet because of the small amount of action you take today.
And what I love about it as well is it will enable you to scale in the future. Like this is what we call your foundations, the cornerstones of your passive income in the future. But hey, if you learn a lot or you have more success than you anticipated, then shoot for the stars, you'll hit the moon and go for it. But this is sort of a nice baseline strategy that will get you at least financially independent in the future.
I love that. Like, I believe that everyone listening to this is going to have more success than they can imagine. And that's my hope for everyone. Like, you learn from these things that, you know, I've sort of banged up a bit and people end up in a good position because it is easy. So the first stage of the journey online is called accumulation because it sounds a bit fancier and a bit harder. But offline, if I was talking to you, I'd be like, dude, this is just when you buy the properties that will make you financially free in the future.
I love that. Nice and simple.
Nice and simple. So let's just pretend you want to replace $100,000 a year of income in 15 years' time. Like, we've got people that come to us wanting to replace 50K. Had a dude a few weeks ago that wanted 30 grand. And I'm like, fuck yeah, bro. Like, that was my first goal as well.
Yeah, you got to start somewhere.
But I've had other people say I want 400K or 500K, and I'm like, that's cool. What are you prepared to do for that? So I saw this incredible post on Instagram last night, I think from Jack Delosa, and he was like, decide what you want, decide what it's going to cost you, and then decide if you're prepared to pay the price.
Love that.
Because fucking trust me, as someone who has gone through it and thankfully popped out the other side stoked, which everyone will, and I've heard Elon Musk talk about this too, like, excited in it, super excited again.
Yeah.
You've got to go through like your journey of just a lot of figuring yourself out to pop out the other side, but it's going to take something more than you are doing right now. Otherwise, you'd already have financial freedom today.
But don't all things worth attaining come with their challenges that you have to overcome? Like,
100%.
Nothing that's valuable in life comes easy. And financial freedom is such a huge goal for so many people, yet so fleeting as well. You know, you don't talk to many people that are actually financially free. Yeah,
it's so fleeting.
It is. It's floating away like a butterfly into the distance. But it's hard. If it were easy, there'd be more people financially free. So
the economic system's set up to get us all to pension at 70.
Yep.
And you guys and myself and Simon are trying to get there in our 30s, 40s. So it's going to take a tiny bit more effort.
Yep.
But the reward of just making it happen.
Yeah.
And not to be financially free, but to have choices.
Yep.
And the choice to spend the time with the people you care about, to do meaningful work. Like, I actually love what we get to do. I'm so fortunate and grateful and privileged and like blessed to be able to do this stuff.
I was talking to an amazing girl yesterday from Melbourne, and she was telling me about her long-term goal, and she works as a consultant, as a business analyst, and her goal is to become financially free in her early to mid 40s so that she can take on projects that aren't about the money but are about helping, you know, really good businesses become what they could potentially become as well. And she's like, I want to make sure that I have my passive income, rain, hail or shine, big contract, little contract, so that I can live by my values and focus on helping the people that are going to change this world for the better. And I'm just like, isn't that beautiful? And isn't that so selfless that you are doing something for yourself so you can do more for others?
100%. Like, I've said this to you so many times, and we talk about this all the time. Like, we get to contribute to, I believe, making things a little bit better, because I believe the more people that are financially free, less people living in fear. And once you've earned a little bit of money, you realise money is just energy. It's a vehicle, and it gives you choices to become, I believe, a way better version of yourself. Like, the dude that I was in my early 20s compared to now is like night and day different, I believe. Like, I'm so grateful to have been able to like think about like looking after myself better, looking after my family better, looking after other people better, like being a little bit kinder, a little bit softer, like thinking about other people first. And like, that's a cool place that everyone should, I believe we should all aspire to be our best selves in this lifetime.
100%, man, 100%.
So, you know, step one, accumulation, when you buy the properties to make you free.
Yep.
It starts really simply.
Yep.
It starts with buying a home, because based on the history, homes have done way better.
Yep. Buy homes, houses in metro markets.
That's it. On good sized blocks of land, 450 to 600 square metres plus, quiet streets, quality suburbs. If you want to go further, in suburbs that have done less than the 10-year average performance of other suburbs around it, so that you can pick up some short-term upside.
Yep.
And then, you know, that house, let's just call it, we buy it for 500K.
Yep.
it rents for $500 a week, like super, super simple.
Yep.
That's step one. That is achievable in Brisbane,
Yep.
Adelaide, Darwin, Perth right now.
Mm-hmm.
I'm all about Brisbane.
Yeah.
It's got an Olympics. It's got more people moving here than anywhere else. According to CBA, it's got the strongest economy in Australia. It's like, and it's going to be where 25% of Australia's long-term population growth comes into southeast Queensland. Like, I want to be in the areas where wealthy people live. Yeah,
I think there's value short-term in a lot of those different geographical locations, but I'm going to be investing and we're going to be investing for the long term. You know, this strategy, we don't want to see anybody sell these two properties. Like, this is your financial freedom. So if you're going to be holding them for 15, 20, 30, hopefully 40 plus years, then Brisbane's a really safe bet, because historically it's performed just as good, if not better, than Sydney and Melbourne, according to Homely's 50-year data. And with that huge amount of population growth, infrastructure growth, income growth, you know, it's ticking all of those fundamentals.
Absolutely, man. So we buy that first property, and once you've got comfortable with that, I've got clients that bought one property 7 years ago and they're still figuring out that comfort level after that first one. These people have made like 400 grand on what they bought and just enjoying themselves. It's not a race. These are people that enjoy what they're doing and are happy to continue to do that for the next 30 years and don't need to take an immediate next step. We've got other clients that have bought 5 or 6 properties in 6 months. Like Ben B, who's one of the biggest ballers I've ever met. But you know, I suppose where we go from that first property is into a second one. This time we go for the same thing, but it has to be 600 square meters plus. Good quality home on the front. We buy it for 550K. And then I think as an investor and as a person, life is about stepping.
Absolutely.
Learning a little bit more. Like, we feel fulfilled as humans if we're learning and growing just a little bit outside the box. So we buy the home, we rent the home out, then we work with a town planner, builder, certifier, and we build a second home or granny flat out the back.
Yeah, so just leveling up that strategy, you know, implementing something that is a little bit more complex, maybe a little bit more risky, but the rewards, a bit more fun as well. And I like that, you know, life is about those stepping stones, and you want to challenge yourself, you want to become a better investor, and implementing a strategy like that where you can build a little granny flat, it sort of dips your toe in the development pool, which is what I really like. And, you know, you start with the basics, then you add a level of complexity, and then, you know, after that, if you choose to scale even further, you can continue that. But you've at least got a bit of experience working with town planners and builders and obviously everything that you need.
Yeah, and, you know, most of us will micromanage the shit out of that process and drive ourselves insane like I did on my first build. And then by the time you get to your, you know, the 7th build or 8th build I think I'm at now, it's like just obsess about finding the right builder, get the plan right, get a fixed price contract in place, and then just let them do what they bloody do.
Yeah, get it done.
You're paying them to do what they do all day. You don't need to call them like I used to.
Yeah.
But, you know, everyone has to learn these lessons themselves.
So at the end of that accumulation phase, when you buy, the ideal is to have one single income property and then another dual income property. So you're getting 3 incomes from the 2 assets.
Yeah. So to sort of round out the second property, the 550K home that rents for $500 a week.
Yep.
And then we can build a granny flat for somewhere between $150,000 and $200,000.
Yeah.
It's almost always up to 200K in Queensland now because there's a whole bunch of site stuff like fences, retaining, landscaping, driveways, carports, paths that have to go in.
I think a lot of people hear the word granny flat and they think of just, you know, the little granny shack out the back, but when you're purpose building it for a long-term strategy, you need to do it properly.
100%.
You want that privacy, you want that separation, you want the off-street parking, you want the landscaped gardens for both the main dwelling and the granny flat, because it'll reduce your vacancy, but most importantly, it'll increase the rental return.
100%. So in most parts of the city of Brisbane right now, you can get sort of between $360 and $450 a week rent for the granny flats.
Yeah, crazy.
On the sunny coast and in the Goldie, you can get $550 to $600 a week for a lot of the granny flats. So these things are renting really well. One of the good sides about people's incomes growing, the population going up, and all these people moving in from overseas is rents have gone up $100, $150 last year, and they're expected to do something similar again this year in most cities.
it's quite sad that, you know, the renter gets passed the bill for these rising interest rates, the people that are unfortunately feeling the higher cost of living more so than anybody else, and then they're dealt that situation as well. Hopefully we can start seeing more supply come to the market from a rental and a buying perspective, right?
I hope so.
Yeah, it's not nice to see.
Yeah, it's rough, man. And I've rented for heaps of years, like, and it stings you when your landlord's like, you can move out or pay $100 more a week.
It's good as an investor, obviously, and the unfortunate reality about this is going to happen regardless of what we decide to do.
Yeah, like, you know, it is what it is. So effectively, you've got your 500K first home that rents for 500 a week, your 550K second home that also rents for 500, and your $200,000 granny flat that rents for, let's call it $400 a week as a round number.
Yep.
So we're sort of sitting in total at about $1.2 million worth of property.
Yep.
With a weekly rent return of what, $1,400 a week, which is $60,000 a year today.
Yeah, today. So once you've finish this accumulation phase, what should you start focusing your attention to once you've got those 2 properties, 3 incomes, just hopefully set and forget?
Yeah, so you move on to the second phase, which we call online consolidation, again to make it sound hard, because I don't know, something about saying it's just where you pay off the debt, Nate.
Yeah, exactly.
Like, is just too easy for people, and so our comments blow up of like, this is too easy, and I'm like, it is easy.
Look, this part of the process is the hardest part of the process as well, reducing that debt.
This is 95% of the journey, right?
Exactly, and it's what's going to actually make or break your passive income.
It's boring, paying off heaps of debt, it's slow, and it isn't as fun as like figuring out which market you're going to buy in, finding a home, finding like that gem below market value in the right suburb, and then building a granny flat. Like, the first part is so fun.
Yep.
And where we're both at the moment this year is just sort of paying off some debt. And it's like, it's incredibly boring as an investor. It's super fun as a person that loves life.
Absolutely. And there's some different things that you can use, like 4 relatively simple things that you can do. You know, you can talk with your mortgage broker and get those loans on P&I, so you're just naturally paying down the debt.
30 years, worst case, you've got rid of the debt.
And the good thing about this strategy is it should be positive cash flow up to about a 5.5% interest only rate as well, based on those numbers. So whatever positive cash flow you get, just sink that into paying off the debt as well. And that's going to compound over time. You know, today it could only be $20 a week, but in 5 years' time, it could be up to $200, $300, $400 per week potentially.
You know, as the debt goes down on your properties over time and the rental return increases, there's just going to be more and more extra income each week. And for me, I get all of the rent from every single investment property I own paid into one account, every expense from all those investments that come out, and then whatever's left over at the end of the year, I just go straight off the debt. And it's funny, like, I didn't do that for 12 years and I never had anything left over because I didn't notice the little bit of passive income that I'd spend on other stuff. Now it's all in one account and it's clear. I leave it and it's working like a treat. It's really doing well.
Yeah, it's good when you've got the right setup, you've got the right accountants, you've got the right mortgage brokers, you've got the right property managers that have got your back, and they're just going to make sure that that's happening just autonomously.
Love that.
And then obviously another benefit is tax, because you're going to build that granny flat brand new, and in Australia you get some pretty wicked depreciation benefits from building brand new properties. You know, you've got
a few of them.
A few of them, luckily.
Yeah, so I've got a report for a granny flat that I recently built for 150K a few years ago.
Yeah.
And I think I was getting about $5,000 a year back at tax time for the first 5 years in the report, and then about $2,500 to $4,000 a year for like 30 years after that. So these reports are definitely worth getting if you buy investment properties in Australia, because thankfully the government gives us some cool stuff at the moment.
Exactly. And then once you get there, you've got your portfolio, you've got your foundations. So rather than saving to invest, you can just save to pay down debt, which is sort of the longer, more boring way to do things, but it will get you to where you want to be if you can be disciplined. But our favorite thing to do, you know, is use your skills and knowledge to your advantage, right? Like buying 2 investment properties and building 1 granny flat, you're going to learn a lot throughout that journey. You're going to have a great team of advisors. You're going to have a lot of experience buying and analysing properties. So you can continue investing and change your strategy from more long-term holds to more short-term holds, which yes, can be challenging to time those correctly, but if you can use the profits and the capital gains to pay down huge chunks of debt.
You know, that strategy, short term to me and Simon, would be 15 years. So let's just say theoretically you bought another third property in Sydney, Melbourne, Brisbane, Perth, whatever you want to do. You know, I've got one of these at the moment on the Sunshine Coast or in Brisbane. And so you basically buy it when you can afford it, and then you sell it, you know, effectively on the advice of your accountant in the future at the right time. And so let's just say theoretically you buy a place worth 600K today in a great up and coming suburb that's got potential growth. Let's say you buy it in Brisbane right now and it rents for 500, 550 a week. So it's not killing you to hold it. And then based on history, that property should effectively double about based on history, every 8 years, but based on our assumption, if it does 4.8% a year for the next 15, it'll double in value. So we're being pretty conservative on that.
Yeah, big time.
And so you've got a property for 600K that you sell for 1.2 mil. I'm not sure what people's debt position at that time is going to be on it, but effectively you'll pay the government a whole bunch of tax and you'll pay the bank what you owe, and you're still going to have a huge chunk of cash left over, which you can wipe straight off the debt of one of those first two places.
That's a nice little way to speed up that debt reduction phase.
Massive way.
Like, I think even if you just go P&I on those loans, in 30 years you're going to be there. Now, if you are getting started in your 40s or 50s, you don't have that amount of time, so you've got to use these other strategies to speed it up. But if you're in your 20s or 30s, you've got time, and you could just do it the slow and easy way.
100%, man. Like, I think for me personally, I wanted financial freedom earlier in my life. Just, I don't know, like, because that was the goal that I set when I was 24.
Challenge yourself.
And it was just like, I know how achievable it is too.
Yeah.
And so it's like, why not find financial freedom in your early 40s, early 50s, and, you know, help other people and spend more time with your kids or your grandkids and travel the world and, you know, work for free for that charity with your amazing skill set because you can, and like not have to stress about cash. So we said with this portfolio at the start, after you've completed the first home, the second home and the granny flat, you're sitting on about $1.2 million worth of property today. In 15 years, based on that portfolio growing by 4.8% a year, you're going to be sitting on what, $2.4 million worth of property.
Yep.
And we ultimately would like you to be debt free at that point if you can. And then the rent, $60,000 a year today. Effectively, I've just realised I said $60,000 before, but it's actually $70,000 a year of today. So sorry guys for that maths issue.
I think it's about $1,300 per week is what you said. So yeah.
Yeah, $1,400 a week.
Yeah.
500 a week plus 500 plus 400.
Yeah.
And times by 50 weeks a year, 70K. So sorry about that.
That's all right.
But if we increase the rent by 2.5% per annum, which is based on history very conservative, in 2022 rents went up by 21% in Brisbane. So you got 10 years of rental growth in 1 year. But let's just say it ticks away. 70 grand today in 15 years is going to be $100,000 on the dot. Now, yes, you're going to have to pay your managers, your rates, your water, your insurances, your maintenance. But even if that costs you 25 grand a year, you're still talking about $75,000 a year of income before you get out of bed. That gives you choices big time.
That gives you a huge amount of choices. And as we said, this is a starting point. This is to go, okay, if I execute this strategy, if I purchase this property portfolio, then in the future when I own it outright, I will be, maybe we call it financial independence as opposed to freedom.
Yeah.
And if that's not enough for you, then I'd say you're earning a bit more money than the average person anyway, so you might be able to push the envelope a little bit further.
Oh shit, yeah. Like, so many people listening to this are like, man, that's nice, that's so easy, I've got that. I want to go into 150 or 200.
Exactly.
Simple, like buy the first foundational home and then add a house and a granny flat and one more to get to 150, or a third, like a fourth property with a granny flat to get to your sort of 200K.
But let's start with the basics, right? And that's what it's all about. It's like, let's start with something that will get me a return and will get me a passive income for life.
Yeah.
And then knowing that all things will change, because for me, you know, my initial goal was 50K per year. Then after buying my first home, it went to 100K per year. Then after meeting Taylor and buying our family home and talking about kids and stuff, that quickly went to 150K per year. And that's life. Things change and you've got to be willing to adapt to those changes. So, you can start with that 100K gross passive income in 15 years. And then if you want to, you can push it further. Or if you're a super happy person that's just content with where you're at right now, then you might only need to go for the one property and one granny flat, like the guys that we talk to sometimes.
And so with your, with your journey, like you bought your first property in which year again?
18, end of 18, start of 19,
so
I settled.
That, like 5-6 years ago?
4 years ago now, yeah.
That's it.
Yeah.
Just to show you guys, Simon at that time was sort of doing, basically just out of uni, still doing uni part-time almost.
Yeah, it was.
And, you're working across this business and our old one.
Yeah.
I think the salary was, can't remember.
55K.
55K.
Yeah.
You were able to save a deposit for your first property and buy it.
Yeah, I think I moved to Queensland with about $2,500 of debt that I owed to Dad because I had literally no money to my name when I drove up.
100, yeah, that's so sick, bro.
So I saved a lot of money in those first few years, and I did what all of my mentors and all of the people that I looked up to told me to. I paid myself first. I sacrificed the little things in life. And I learned to find happiness in things that are free, like surfing and spending quality time with friends, little trips rather than the bigger trips, and just still bought myself a new surfboard every year, and still did fun little bits and pieces like that. But, the paying myself first was the biggest reason that I was able to build the deposit for really quickly.
And so that was 4 or 5 years ago now. And you've bought another 3 houses since then. So you've got your own home and 3 other investment properties, all with the potential to be knocked down and rebuilt into houses with granny flats, or renovated and houses with granny flats, or you could just sit on them all, build something amazing and do whatever you want to do with them in the future too. There's just so many choices that you've got in your portfolio. And so I want people to go, I started as well 2011. I was 24, working at IBM, earning 50 grand a year. And I bought 2 properties in that first year with them. And I'm it wasn't hard because I knew what I wanted more than I wanted. I just can't remember really sacrificing that much, but it's because I suppose you and I both love simple shit.
Yeah.
I've got a really nice home and a caravan now, and they're my big expenses. But in reality, the stuff that we like doing is
dirt cheap.
So simple. And then adding in holidays and good food, they're probably the expensive things in our lives. But that period of hustle to get the deposits to buy the places is so far behind us both now. Because you've made equity on those 4 places. If you want to buy another property now, go get 25K out of 4 joints, which, increase the rent on all 4 joints by $15 a week to cover the extra interest, or $50 a week each. And all of a sudden you're where you want to be. There's a deposit for another joint.
And that's the beauty of being an investor, is it gives you choices. And it'll give you choices, ultimate choices when you're financially free, but it gives you choices along that journey as well, because, I have been fortunate enough to get some capital gains there. And, I listened and I focused on the fundamentals. I bought a good location and a crappy house so that I had options to renovate, to knock down, rebuild, to add granny flats. And the more options that you have, the easier that it's going to be to get there. And it's you look at our sister Crystal and her husband Matt, they've been amazing. I think they've bought 5 or 6 properties over the last 5 years now. And, they got to a point where they were feeling the burn a little bit, and their 3rd baby on the way, 3rd baby under the age of 4.
Yeah.
They were right now, let's just sell one of these properties, pocket that cash, make sure that we're happy and calm and content with our financial situation right now. And she can take an extended maternity leave. She doesn't have to worry about finances. She's used the market, she's used leverage to give her choices at an earlier age in life. And that's something that's overlooked a lot in investing. People think right far into the future for that financial freedom, which that's exactly what I'm working towards, but I have choices today as well, which is a beautiful thing, especially being 30 years old.
Man, for sure. Like one of the boys in our office, Haydos, who is an accountant, and he's also like a previous client of ours that did exactly this, bought a great home, 10, 12 k's in the city, bought another home on one of the beaches when it was really cheap on the north side, built a granny flat, like executed this exact strategy with us years ago, between 2018 and 19, I think. And now he's bought a home on the Sunshine Coast in a great suburb, beach side of the main road. And he's literally working for us 3, maybe 4 days a week. He's just had his first bub. His partner's only working 2 days a week. And he calls it financial peace. He's hit that point where, same as myself, Simon, and a lot of you guys, you've got the assets now that are going to get you to where you want to be. And that gives you a baseline level of like, it's all going to be cool. And then there's a choice point again, which is like, well, do I want it in 15 years, or I'm happy to just cruise through the next 30 and know that it's all going to be looked after and work out. And I think peace is what we're after in this fucking crazy world that we've been in for the last few years.
Yeah, I think that's a good segue into like what we need to talk about next, because a common question for a lot of people is now a good time to be buying property? So we're doing the analysis every single day. We get a lot of inside reports from the big banks and the RBA and some very experienced investors as well. So what do you feel as though has changed?
From this time last year, or like from the news last night to this morning? Because like the blowing of the wind pushes people without a clear direction and a set sail everywhere, right?
Yeah.
You know, every single time the RBA puts up an interest rate, it's like they've been telling you for a year and a half that they're going to go to 6%, but every time it jumps up by a point, people freeze. And it's like, and you know what I mean? So this is how life works. 90% of people that don't have a direction like us and you guys are going to get blown by the noise of all of the crazy stuff in the economic system in this world that we like have to deal with as people who are now part of a global community. And, you know, instead of like 30 people in the village and getting attacked by a random in the village or another tribe, we've got a whole bunch of threats in this global community that we see constantly that spike cortisol, adrenaline, stress response. And so it's like, am I going to choose, this is the point that I'm at right now, am I going to choose to continue to be spiked by these 1,000 different perceived threats in our environment every day? Or am I going to transcend that and create the life that I really want?
I love that, man.
And I think the thing that's changed is, fuck yeah, interest rates have gone up.
Yeah.
2% to 6% is the biggest jump in Australian history in a 9-month period ever.
Yeah, it's hurting the back pocket for most people.
Smashing me. Like I'm $150,000 worse off this year in interest than I was last year. That smashes me. It means that I've got to like work more, which I'm happy to do.
Yeah.
But I like want the choice to as well.
Yeah.
And it's also put a fire under me to go, hang on, financial freedom is debt free.
Yeah.
It's not interest rates going from 2% to 10% and then back to 2.
You need that title deed, you know, you really need it. And you look at investors like Kiyosaki at the moment that's gone heavy debt. And it's just like...
Yeah, he's feeling at 9% on $1 billion.
Exactly.
Like that's $90 million a year in interest this guy's up for.
And that's why we like that 2 property strategy as well. Like it's 2 properties. It's about $1 million worth of debt that you need to pay off long term. And once you get that title deed, you will be financially free as well. But it's I don't like I love leverage, but I don't like debt.
I love that. I like leverage, but I don't like debt. And the way that we both grew up, man, is the same as most of you. It's like we got an incredible family that loved us, that taught us. Dad taught us the most incredible business skills that I'm so grateful for. And Dad and Mum paid off their house pretty young, like when you think about it, and they didn't have a lot of pressure. But it's also like we didn't grow up with like, hey man, here's like your first house deposit or we'll guarantee your first property. Like you grinded your ass off for like a year and a half to save that deposit, and so did I. I spent mine in America and then saved another one. That was sick.
Oh man.
A good 2-week trip to spend a full deposit on a house. But like what's changed is interest rates have gone up.
Cost of living's gone up.
Cost of living's gone up. In most industries though that aren't like your like starting point industries, like administration, hospitality, tourism. Most of my clients that I talk to that are in some services or some relating mining, construction, their incomes have gone up like between 5 and 50% in the last 2 years.
Yeah.
So a lot of people have gone up too. There is more fear now than any point that I can remember since I've been an investor.
I think the media is a huge part of that as well. Like, yes, interest rates have gone up. Yes, inflation has been an issue. Yes, the cost of living has gone up, but we will talk about things that haven't changed in a minute as well. And it's just, it's unfortunate to see the media put such a negative spin on property to people that, you know, are struggling to get ahead in life and start focusing on what truly matters in that long-term future. And when you are in that fear state, you can't see the forest from the trees, and it gets really difficult to take action in these markets when really it can be a great time to buy for a lot of people.
You know, that is the positive thing that's changed. Like in many markets in Australia, prices have come down.
Yeah.
10 in Sydney and Melbourne, I believe they're down 15% right now. And they might even get to 20% down with these interest rate spikes, the next 3 of them in the next few months. So it's like, this is, I mean, what more are you waiting for? Like, what more are you waiting for than the biggest decline in recorded Australian history to take advantage of the market? And I'm not saying let's go out there and buy a property and make 10% and flog it with the entry costs, holding costs, and exit costs. You actually lose money on that.
Yeah.
I'm talking about let's confront all of this stuff in ourselves and go, well, what if I looked at where I was and decided clearly where I wanted to be, financial freedom and a life filled with choices, and then I slowly and strategically use best historical practice to go after that. And instead of like putting the head in the sand and coming back into it when they drop interest rates by 1% between September and March 23, 24.
Knowing it's too late by then.
And we know when they drop rates by 1%, based on Commonwealth Bank's 60 years of research, we'll see a 15% spike in prices. And the 10% spike on the dip on the way in. That's a 25% difference in 1.5 years from bringing forward a decision that you're already going to make.
Exactly. And I think the reality is like some people will just never find the confidence or never find the ability to go out there and do it, and that's totally cool. Like, you know, investing isn't for everybody. It is for people that have a bit of a thicker stomach and have a bigger perspective, a longer term perspective. And it's like, you know, people will, but the ones that won't are very noisy at the moment. The ones that are scared and that have been wanting the property market to crash for a long time are really noisy, and it's just adding more fuel to the fire, and the flames are getting bigger, and it's hard to see the forest for the trees there. And I think going back into history and looking at some of the positive things that are happening around the world at the moment, you know, is going to give you that bigger perspective. Like population growth in Australia right now, I think I read something that said 500,000 students are expected to come back to Australia this year. 2023, 500,000 students, and another 270,000 immigrants moving to Australia. Only 250,000 properties are expected to be built this year, assuming that 2.5 people live in every house, like 770,000 people with only $250,000 dwellings being built. There is a large disconnect, which means vacancy rates are going to trend where they are, maybe even lower. Rents are going to rise, which helps with the rising inflation, presents a better rental yield. Like, do you see the article from CoreLogic recently looking at the rental yields and like the long-term average, you know, in a place like Brisbane?
The vacancy rates, you mean?
The vacancy rates, sorry. The vacancy rates was like a 2.4% long-term average, and right now it's sitting at 1.1.
It's insane. Like, this is the most undersupplied the Australian property market has ever been. And there's a whole bunch of reasons for that, which we don't have to go into. But what it is resulting in is pressure on rental accommodation combined with income growth. Now, the thing that I was catching up with my accountant yesterday, had a mad 1 hour
awesome
talk about real stuff. And so there's a few things like that are happening right now which are really unique. Firstly, Australia has never ever had such a construction undersupply. The reason being, in 2015, the Australian government has basically prohibited development in a positive way because they stopped lending money to developers. And they stopped lending money to everyone, but it's created this bottleneck of hundreds of thousands of more properties needed than are here right now. And then on top of that, we add in Airbnb booming. And so thousands and tens of thousands of dwellings that should be on the long-term market are now on Airbnb, which is, it's just natural for the market to chase higher returns and actually provide places for these 10 million people that come to Australia to stay. And so that's happening at the same time. And then you've got this incredible infrastructure boom that we've never ever seen in Australia, which is the COVID infrastructure bailout plan, $120 billion in the next 10 years. Then we've won an Olympics and we're going for 60 million people in Australia. And it's like all of these things are happening at the same time. And then we've got this insane interest rate environment where interest rates are up, but we're servicing people, like we're looking at people, you know, from a servicing perspective in a really, really brutally harsh way. And so it's just creating this like constant like pull back of this bow. And it's a beautiful thing. I love that the Australian government does it.
Yeah.
On top of that, talking to the accountant, like getting back, there's not just inflation occurring, which is increasing wages, but then there's also a decrease in the average house price. So let's say house prices end up top to bottom at 15% Australia-wide down. And from the start of COVID to the end of this cycle, by the end of this year, the average person's income's gone up 15% too. Now, I'll get a whole heap of hate by saying that because I know that a lot of people's incomes haven't gone up $1 and it's hard, but so many people's have as well. And they're not the ones like noisily complaining about it either.
No.
And so on top of that, there's this monster tax cut that the Labor government and the Liberal government's proposing, which means the tax rate will go to 200K. And for people earning up to 200K, instead of paying 45 cents in a dollar, they'll pay 30 cents tax on the dollar. So a 15% increase from, you know, all of those three things. Like I just look at wages going up, a tax cut coming down and property prices coming down.
Interest rates meant to come down as well.
And then an interest rate decrease. According to Commonwealth Bank, it is like, in their words, like in their CommSec report, the perfect storm. They reckon even Sydney by the end of 2024 will be so reset by those three things that property will feel cheap again.
And remember when we were having these discussions on camera back in 2019, 2020, when we were like talking about the changes to APRA, we were talking about the influence of COVID and the lockdowns, and you used the same analogy back then of the bow and arrow, and you had all this friction and all of these policies pulling it back and pulling it back and pulling it back, and then what happened at the end of 2020 through to the middle of 2022, you know, the biggest real estate boom in history over that period of time. And, you know, what goes up must come down. The bigger the booms, the bigger the bust. And that's why we're going through this environment at the moment. But you can see the same friction occurring at the moment. It's getting pulled back. And when you look at the analysis of some of the longer term people, it's like they expect another unprecedented land boom in 2024, 2025 and 2026.
Yeah, and like based on hundreds of years of history from the book The Secret Life of Real Estate and Banking from Phil Anderson, like that next phase of the cycle is phenomenal, and people, we can't even imagine right now, you know, but the predictions that I'm hearing from people that understand this are saying anywhere between a 40 to 70% spike in certain locations within Australia, Europe and America in terms of property. Wow. And the people that I follow are suggesting that, you know, the ASX or the S&P, you know, it could either sit flat or there's potential for it to go up as much as 100% in the next 4 years. Now, these are crazy things to be saying at the moment, and they're not I don't know what the hell is going to happen. Like, who knows? It could be flat for the next 20 years. We don't know. But
could be Japan.
These people are pretty clever and they've been following stuff for a long time. You know what I mean? And I believe that people are sick of living the way that they've been living. And I believe that people are ready to just like spread their wings again, become the best versions of themselves, have an actual crack and just get all of this stuff behind them so that they can go, you know, a bit feral. And, you know, off the back of that is going to come a stock market and real estate boom that we haven't seen for a while.
And
then a massive bust.
yeah, as we say, all things that go up must come down, right? So I think it's good to look at Australia as like, there's many markets throughout Australia. We talk about this a lot, and that's clearly showing up in the data at the moment as well. Like, you look at the analysis from Tim Lawless at CoreLogic, and he's clearly indicating that the top end of the market, the most expensive properties around Australia, are leading the declines at the moment. And because we had such a strong boom in Sydney, Melbourne, inner city Brisbane, Gold Coast, Sunshine Coast, Geelong, Newcastle, Wollongong, all of these quite expensive markets, those areas equate to 70-75% of the Australian market. So no wonder the national average looks like it's coming down something fierce right now. It's because all of those properties that had a massive boom are now coming back because it's harder to service loans at a higher price point right now, and there's less demand for those types of properties. But we're experiencing higher levels of demand for properties valued between $500,000 to about $750,000 in Brisbane right now, which is really the sweet spot in this market that we know best. And that's because it is affordable. You do have strong rental yields for those types of properties. They have underperformed in comparison to their longer term averages. And people still need a roof over their head, especially with this rental crisis. If you can't find a rental property, then you're going to do what you need to do to get a roof over your head. And a lot of people might buy as well, because that'll fuel more demand.
You know, they're massively stimulating the first home buyers, not so much in Queensland, but in other states. I'm seeing as little as 2% deposits with free lenders mortgage insurance, or even these new government-backed loans.
Yep, no stamp duty in New South Wales for first-time buyers.
You know, this is the way that it happens, like, and it's just understanding that they like put out the fire and then they restoke it and then they put some petrol on it for a while, and it keeps moving through these things. Like, I talked to one of our clients, she's looking to buy a whole bunch of properties, maybe 6 to 10 properties with us over the next 5 years. And she was in a position where she could have sold her house in Byron Bay $7 to $8 million at the peak last year. She couldn't get 5 for it now. So she's taking it off the market. Like, that's a $2 million dip. But percentage-wise, we're talking like big percentages, 25, 30% decline. And those types of higher-end properties lead these market declines. And so it's interesting to dissect the data, because I think when Tim Lawless looked at properties sub 1.4 million in Australia, the decline, if you look on TV, is probably somewhere between 10 and 15%. In Sydney, Melbourne and Brisbane's, you know, coming to that point, 10%. Perth will probably as well at some point. It's just like, it looks brutal. And then you look at the sub $1.4 million properties over this same cycle, and we're talking about a less than 1% dip from top to bottom. And so it's just being aware of, like, what is the agenda of the media? It is the sell advertising space. What is our agenda, which is equally important to us? I want real estate to do well. I mean, it's in my business and it's what I do to support my family.
It's our passion.
Of course I want it to do well.
Yep.
But I'm not a dumbass. Like, I know that in 10 years, I'm probably going to have 2 to 3 amazing years, 2 to 3 shocking years, and a whole bunch of flat, noisy, bumpy stuff that doesn't amount to really anything. And Michael Matusik said it to me years ago when I was at his like little day camp, which was so sick. He's like, property is going to become like steps. So in the past, it's been like this, if you look at it on a long-term chart.
Yeah.
But in reality, it's always looked like that.
Yeah.
And he said he believes markets will start looking like this. And I'm like, I heard it 5 years ago. Crazy gain, flat. Crazy gain, flat. And like, since he said that, it's kind of been like that. It's like
reality.
a year and a half of nuts, followed by a year and a half where places come off. And that's been pretty much the pattern since APRA stepped in back in sort of 15.
I just like to ask myself the question as well, is like, you know, what are the potential consequences of not doing anything? Like, what if everybody's wrong and property prices start rising sooner?
Can I ask you that question? Like, what would your life look like if you hadn't started to invest like 5 years ago? Like, theoretically.
Yep. I'd be in a less financially stable position. I'd have less options in life. I'd be forced to work more hours and harder to work towards building up those deposits. I wouldn't have financial peace in my life. I wouldn't have the clarity and the confidence that long term I'm going to be completely sweet. And I think the worst thing is I would have to pay about 20% more for the properties than what I secured them for back in the day, because the market has risen in value so significantly, which that would lead to higher debt levels. It would also lead to a lower rental yield, and it would take me longer to pay off that higher debt as well. So it would have actually pushed my journey to financial freedom out by about 7 years if I did nothing.
Which doesn't sound like a lot until you're working from 50 to 57 or from 55 to 62. Like, it's a significant chunk of your life that you're trading by not taking action. I want to answer the same question.
Yeah.
You know, I wouldn't be able to drop my kids at school or pick them up. I wouldn't be able to go to their sport, or even if they want me to, like, coach them. I wouldn't be able to, like, wake up in the morning and just, like, feel the way that I feel, which is, like, meditate, morning routines in the same way that I do them now.
Yeah.
And, like, train every single day or surf 3 times a week. I wouldn't be able to go away for 8 to 12 weeks per year or work 4 days a week and take every Friday off for the last 5 years. Like, I just couldn't have made any of these decisions, because all I could see if I hadn't have invested is up.
Yeah.
And when all you can see is up, it triggers fight response.
Survival mode.
And that's where I would be locked in. Like, I would be locked in. I wouldn't have created, like, the relationship that I have spiritually now.
Yeah.
Like, and I've actually refound a relationship with God. I don't really say that much on camera or anything, but like a deep connection to, like, source and, like, Mother Nature, and just letting a whole bunch of shit that doesn't matter go. Like, I wouldn't have been able to talk to 2,000 to 5,000 insanely beautiful people in the last 7 years in this business. Like, it's like everything would have changed. Like, I've got to be there for my kids in the most nuts way. Like, it's just insane. Like, finding purpose, finding passion. Like, I wouldn't have been able to do that because I couldn't have seen anything more than I had.
The people that we've been forced to become from following this path has enabled us to have the life that we have. And, I went for a surf the other day, and I was out there with one of the ex-CT pro surfers from the Sunshine Coast, Keely Andrew. And we were just chatting, and, she's just retired from surfing. And I'm like, what's your plans? What are you doing with your life and stuff like that? And she was just saying, I'm going to finish my uni degree. I'm going to go out there and get a job. And she's sort of just starting from scratch. And she's like, what have you been up to? And I was just like, she's like, oh, you're living the dream. And I'm like, well, I'm living my dream, and it's been by design.
And you're looking at her going, man, like, you just lived the dream for the I was like, I wouldn't mind being that good to be on tour.
Yeah, exactly.
Traveling the world to surf the best waves.
But it's just funny. And I actually asked her there, I'm like, did you have somebody that was mentoring you and providing you with financial advice while you were on tour earning massive money? And she's like, nah, like, it's more about taking than giving in that industry, which is really, really sad to hear. And it just left me feeling like, this poor person that's given everything that she's got to this one occupation, this one passion, but now she's starting from scratch at a little bit of an older age now. And it just comes back to just making those decisions at an earlier age and just committing to the sacrifice and the discipline that it takes to develop a strategy that's going to get you a passive income for life and financially peaceful, financially independent, then eventually financially free. And I just think about that opportunity cost of not doing anything is just too great for me to be able to justify. And I feel as though the opportunity cost of not doing anything is far greater than the opportunity cost of confronting my fears and doing it anyway.
I love that, man. That's epic to hear. And I think, just to round this out, guys, if you don't have a plan or a strategy at the moment or an idea, because this is just an idea, this podcast, do it any bloody way you want. Do something.
Just do something.
Go talk to an amazing financial advisor or an accountant. Go listen to, I've listened to more than 10,000 hours of this stuff now on property, book. Like, I feel like I've read more than 1,000 books now. And like, I'm constantly consuming information and data to, like, get to the point where I'm like, I don't need to hear the same thing anymore. Like, now I need to hear myself. And many of you guys are at that point. Like, maybe you've stumbled on our podcast or our videos and you're like, finally, like, something that makes sense. And what makes sense about this is, like, if you don't have a plan, just start with this one. Like, a house, a house and a granny flat, get yourself to 70K a year of income, get yourself to $1.2 million worth of assets that on average will go up by 5% a year. That will give you every choice that you want moving forward after that. And then knowing that the 1.2 becomes, 2.4 in 15 years based on those numbers we talked about, knowing that the 70K becomes 100, like why not just start there? And then, I don't think you thought about going to 4 properties. I certainly didn't think about as many as I've gone to. And I've sold most of them and paid the tax, and I'm like, that was too much. Like, you'll find your own sweet spot, but start with something that resonates with you, that's easy, that is within your comfort level. We're not talking about going out there and buying $1 million places. We're not talking about buying shitty off the plan units or greenfield sites. We're talking about high quality, simple stuff that you would be proud to raise your kids in the best capital cities in Australia, and then picking the city that's cheap. And when Sydney becomes cheap again, you won't be hearing us talking about Brisbane anymore. We'll be straight back down there, or Melbourne, because Brisbane will be on fire. And then when Brisbane gets affordable again, you won't be hearing us talk about Sydney anymore. Like, you've got to just move between what is working based on data.
Absolutely, man. You make it sound so simple. Which
there's a lot of pieces to
there's
this.
a lot of nuances to it, absolutely. But at the end of the day, 3 stages, right? Buy property, pay off debt, realise financial freedom.
And enjoy the journey.
And just be in it for the long haul. Be in it for the long term, 10, 15, 20 years minimum.
I hope you guys have enjoyed this one today. Have an epic day or an epic week.
Woo!
That's a wrap.
That's a wrap.
Have a swim.
Yeah.
Oh, sweaty. So sweaty. Oh, that's good. Look at that. So nice, eh? Oh.